Hello and welcome to the African Tech Roundup, episode 115. Now, this is where we round up the most important tech, digital, and innovation highlights from across the African continent. My name is Andile Masugu. I'm really glad you could join us. Here on the show with me, as per usual, is the homie, digital marketing maven, and founder of the Bridge Labs group, Musa Kalenga. What's up, bro?
Hey, Andile, how you doing? Look. You see, that title is too long. You need to cut that
down. Dog. Listen, bro. This is the last show of the year.
Yeah, man.
I'm not going to give you the abbreviated title, not the but.
Yeah.
You were the homie. I threw that in,
yeah.
but
it's official now, right?
Bro. But you are other things too.
Yeah.
You bring a lot of value to the show. Gotta big up you, bro.
Thank you very much, man.
Welcome back, man. One last time for 2017, bro.
Yep, it's gonna be good. It's been a good last couple of months,
dude. It's been pretty insightful. I mean, we've had incredible guests.
Yeah.
We've been learning a ton.
Yeah.
We've been, just pounding the continent with our commentary.
Yeah.
And our opinion.
And the Twitterati have been responding.
The Twitterati, y'all have been responding on social. We just want a big shout out to all of you who engage us long after, the mics are turned off. You keep the conversation going via social, on Twitter and Facebook, or when you even meet us in person. We'll be telling you how you can keep doing that all through the holiday. But first, we have a special guest joining us for the very last podcast taping of 2017. It's former consultant turned venture capitalist, a certain Rushil Vallabh. Welcome, Rushil.
Thank you very much, Andile. Thanks for having me.
No, the pleasure's ours, to be sure. You're the MD, of course, at Secha Capital. Who did you leave in charge of the office, actually, while you're playing with us?
Actually, there's nobody because Brendan's in the US.
Okay. I don't know how you're going to write this off to a productive couple of hours, but hopefully...
Marketing.
Okay, cool. Well, listen, thanks for being here. You're, of course, here to debate. We'll discuss. We'll see which way it goes. We brought you here to debate or discuss some of the more appropriate VC approaches for the African continent. It's been a huge topic for us over the last couple of weeks. Many of you have been engaging us online, as I mentioned earlier. But your co-founder at Secha actually reached out to us on social media, going, "Hey, we think we're getting it right over here," and a little back and forth. And we thought, this dude might be onto something. Let's get him in. He's not here today, but he sent his MD. So I think we're doing well. Thanks for being here, bro.
Yeah, I'm glad Brendan shut his mouth off and sends me to do the hard work.
Nah, look, we're a friendly bunch over here. We're a friendly bunch. So
I'll tell you a funny story.
Yeah.
Because it's serendipitous, right? I met Rushil about a month ago.
What?
We're both in Cape Town. We're at AfricaCom, and we're running a program called A Stars. So he was one of the speakers, and I was facilitating. And I came back, and he said, "We're going to be speaking to Secha Capital." I'm like, "No, man, I'm pretty sure I know who this person is." So I went back and then I thought, okay, Rushil's going to be here. Then we actually had a meeting about 2 weeks ago before we came on board. So it's come full circle, man.
It is a very small world.
This is the tech ecosystem right now.
Well, that's how it goes. And I'm glad to be in on this party, clearly, which got started long before I got here.
Yeah.
But no, Rushil, thanks for being here. Look, I mean, there was a discussion that started this whole thing based on our last show. We asked the question, should Africa-focused investors back gorillas, gazelles, or unicorns? So if you haven't listened to that show, do the thing. Visit africantechroundup.com, go find the previous episode, catch yourself up, and then you'll enjoy this particular episode that much more. What we're going to do is catch up on some of the biggest highlights to emerge over the last couple of weeks, and then we'll dig into this very fascinating topic. But first, this episode of the African Tech Roundup is brought to you by the Africa Tech Summit Kigali. It's happening in Rwanda, Kigali, of course, being the capital of Rwanda. It's happening on the 14th and 15th of February 2018. Now, this event is being supported by the Rwandan Ministry for ICT, and it promises to deliver unrivaled insights, networking, and business opportunities for African and international tech leaders and investors looking to drive business growth right here on the continent. Now, Rwanda is no doubt keen to position as a leading technology and innovation hub on the continent, as sort of a Africa's Singapore, if you will. So I think it's quite fitting that this summit actually happened there. I'm looking forward, having never been to Kigali myself, to checking out what all the hype is about. They're making the news for all sorts of reasons. It'll be fun to meet you there. So do join us for this 2-day gathering, which will explore the latest trends, featuring over 50 expert speakers. It will connect over 250 key stakeholders from across the continent through keynotes, breakout sessions, and of course, networking events. Now, African Tech Roundup is pleased to be an official media partner for this event, and I look forward to meeting many of you and facilitating some important conversations both on stage and at the fringes of this event. You know how we do. We'll not give up the opportunity to get some dope conversations on tape. So here's your call to action. Head to africatechsummit.com. Head there right now to view the growing list of speakers who will be attending, and more importantly, to take advantage of the $300 early bird booking rate, which expires in January 2018. That's africatechsummit.com for all the information you need and to book yourself a seat. Come on, see you there. With all that said and done, let's start with some interesting acquisition news. Let's just get through some of the more interesting highlights. It's actually a fairly busy, final quarter for African tech. Usually by this time of the year, we're struggling to find things to talk about. But big names like EOH and Naspers and Steinhoff that are trending here in South Africa for all sorts of horrendous reasons. So there's lots, to talk about because of that. But some positive news as well in terms of acquisitions. Starting first with the Kenyan on-demand logistics startup Sendi. They've raised $2 million in funding to expand their operations. You'll recall, you guys, that Sendi offers a marketplace for last-mile package delivery and logistics services. They basically allow customers to send packages and documents using a mobile app that connects them with mobile cyclists, motorcyclists, and drivers of vans, pickup trucks, etc. They also have a sort of ride-hailing service attached to that, which I heard they might be letting go of. I'm not sure. Correct me if I'm wrong. So, guys, that's one. Feel free to factor in at any point. I'm going to list a couple more, and then I'll ask you to tell me which one probably excites you the best. Is that cool?
Absolutely.
Okay, cool. So that's one. So Sendi, shout out to you. $2 million richer out in East Africa. M Pharma, shout out to Accra, because this Ghana-based company is starting to disrupt Africa's pharmacy retail supply chain. They are certainly setting their sights on much bigger things, though. They manage prescription drug inventory for pharmacies and their suppliers in no less than 4 African countries. Now, they've landed $6.6 million in their Series A funding round. They're not just that, though. If you've ever heard their founder speak about the business, you'll know that he has a pretty hard time trying to, isolate the key things they do. They've got quite a few different income streams, and it's quite interesting to hear them describe that. But no doubt a growing business with growing purchasing power, helping lower the cost of prescription drugs for patients. So that's M Pharma. Shout out to you all the way in Accra in Ghana. Sun Exchange, right here in South Africa, startup which offers peer-to-peer solar equipment leasing, at least running a marketplace for such equipment. They announced a short while ago that the company has raised $1.6 million in seed financing from several strategic partners, not least the Network Society Ventures outfit out in New York City. So they're looking to boost their capacity to meet demand for their commercial scale solar power projects in some of the more sunny places in the world. And then, shout out to you, Egypt. The AI digital assistant startup Alves has secured $2 million in seed funding from investors that include Emar and the Kaufman Fellows Syndicate, among others. Well, they're famous for a tech-driven virtual assistant platform which uses a quote-unquote human-in-the-loop methodology to drive machine learning and build AI. Ultimately, what they're working on right now is a chat-based platform that allows users to talk to a superhuman assistant, as they call it, to do anything, anywhere in the world, and all for free, which is super interesting. I think last but not least of the more high-profile and more notable items that caught my eye over the last couple of weeks is the fact that the Massmart owned, and of course Massmart is the massive group, retail group here in South Africa, owned by Walmart, or mostly owned by Walmart. They have a retailer on the continent, or at least in South Africa, called Macro. They've acquired a majority stake in a delivery startup called OneDrop. And with this particular acquisition, the company is attempting to shrink the window in terms of time between a customer order and a delivery. They want to shrink that from 3 days to 3 hours for customers located within 20 kilometers of any macro store, which is quite interesting. One Drop, you might recall, has other large customers such as Standard Bank and Zando and the Foschini Group. Good news to all of those guys. One Drop won't be dropping them, excuse the pun. They'll keep servicing them as they continue to obviously now sort of maintain relations with their owners at essentially Macro. So that's 5 interesting acquisition stories, guys. I don't know which one stood out to you and why.
A lot of them. Hey, there's a lot happening at the moment.
Yep.
I think if I just look at Kenya, I mean, the Sandy story is really amazing, and I'm quite happy and proud to see that they're quite aggressive about their growth strategy. I think the COO, Malaika Judd, was also kind of caught on camera saying that while they've concluded this $2 million deal, they're still engaging numerous investors around their growth strategy. So they're still seeking much more aggressive growth, which I think is great. It'll tie into some of the stuff we'll speak about later on.
Yep.
But very much in a space where I think they managed to find a niche around I think a place where Uber has been trying to go in more developed markets around more than humans being transported. What else can be added to that cargo experience?
So pushing the logistics envelope, as it were.
Correct. So micro logistics, for lack of a better word. I don't know whether that's even a
last
term.
mile logistics. Yeah.
Correct. Yeah. Right. So that's a good thing. And I think once again, because Malaika Judd and her founding team also Kenyans, so it's
and we rubbed shoulders with them incidentally at the African Angel Investor Summit.
Yes.
They were rather pleased with themselves, sort of sharing on that. But again, also quite humbly, like you're saying, saying, listen, this is just one step in the right direction.
Correct. Yeah. But it's a good thing. I mean, that's awesome.
Yeah.
And M-Pharma, I mean, I was quite interested to look at their business model a little bit more, because at face value, it's not obvious what they do, but it says that the big opportunity for M-Pharma is fixing the fragmented prescription drug supply chain common in African countries and other emerging markets, which I think is huge as a challenge. Because aside from just the fragmentation, there's a bunch of stuff that needs to be taken into consideration in relation to compliance, in relation to the logistics, in relation to legalities of distribution of drugs, etc., of which I am not a professional. However, I just from the onset, I'm looking at that, I'm seeing it as quite a huge operation. And in 4 countries, it says they're already in the 10 biggest pharmacy chains, which is just under 186 outlets, which is huge. And once again, I mean, as a big, hairy, audacious goal, trying to essentially arrange or organize a drug supply chain is a great thing. So I say big up to the guys from M-Pharma. I think his name is Greg Roxon. So big up, Greg.
In a similar space, kinda, not really, but kinda, in some respects, with the folks at the RxSol fellas, RxSol team in Nigeria. Look, the health economic side of it is very, very interesting. You've just described some of the inefficiencies in Africa's sort of pharmaceutical supply and distribution infrastructure, and all of that translates to super expensive drugs for people who really can't afford them, and anything audacious in that space to bring affordable healthcare to a continent that desperately needs it, to me I think is a big deal. And also to see how a new player like this navigates a legacy business with existing players who aren't exactly trying to go, well, who wants to play, and how they're going to go about breaking the door down to make sure that ultimately, the consumer wins every single time.
I'm interested, Rushil. You've done obviously your time as a consultant. I mean, and I'm pretty sure you get exposed to lots of different stuff. You're in the more retail space now, but I mean, do you have a sense or an opinion on M-Pharma and what they're trying to do?
So I think it's interesting. The 3 other companies you mentioned are logistics focused, solving the Africa logistics problem. We've got 1 billion people that you need to get product to. The pharmaceutical has a great impact story where you can reduce the cost of drugs and the impact that has on people's lives. So I think that's going to be a big trend, and throughout this past year, that's what we've seen, a lot of logistics acquisitions and trying to optimize that on demand versus the Uber for whatever you want to call.
Do you think it's token, or do you think there's an actual play for business value here?
I think there's actual business value here, because if you end up with a consumer who pays X% less for their drugs, does the consumption go up? Do health outcomes increase? Retainability? And then what do you do with that network that you've developed already? So do you expand from pharma into consumer goods, or what happens then? How do you leverage that network, which I think is going to be interesting in the years to come.
Yeah, I think there's a huge, massive short-term opportunity from an efficiency perspective. I mean, that is just phenomenal. But I can't agree more that the actual impact there is the human component, which everybody knows I'm a big fan of. But in the long run, being able to provide accessible drugs to the correct person at the right time, I mean, that's where ultimately we're saving lives and creating sustainability.
We had Adebayo here, who's one of the co-founders of Arxol. They've got an AI driven spectrometer which basically verifies the authenticity of drugs, and they're based in Nigeria, and they've got an impact narrative which they're basically rolling out on the continent in terms of helping pharmacy groups and pharmacy distributors and manufacturers basically ensure that the fake drug problem on the continent, which apparently is super prevalent, they're helping to solve that problem. But at the same time, they are looking to license the IP they've created around the world in places like Malaysia and similar markets. In speaking to him, I got a much better appreciation for what's at stake in terms of the legacy players within pharma, and either their lack of motivation to basically do the right thing, why it might not make business sense, or it might not be worth their while business-wise to pursue the benefits we're discussing, And so it must be quite an interesting place for M-Pharma to be, as a disruptor. If I was sitting at, say, Roche somewhere, Roche, for example, I know is being investigated here in South Africa, currently being investigated for pricing to do with certain very high-end cancer drugs, for example.
Are you allowed to tell us that, Andy?
I am absolutely allowed to tell us. It's public record. Okay. It's public record. So, yeah, the Competition Commission is actually looking into them at the moment for specific drugs.
Oh, wow.
So I think of people like them, and I think about what leads to, and of course I have to say this very carefully, it might well be that they're not overpricing drugs, etc. But I'm thinking that it may well be that the quote-unquote disruptive element of what M-Pharma is set to do has far deeper sort of real business impact on incumbents than we might realize just looking at it as a sort of interesting startup.
Yeah. And I think it plays into that very space that we know Elon Musk has been fighting for a long time. So when you're building electrical cars, you're going to disrupt the motor industry.
Exactly.
Right. So now you're going to be playing in the optimizing logistics. You're going to upset the pharmaceutical industry, and you need thick skin and a big balance sheet and a well-connected group of people that are backing you to make that happen. Or you need a maverick leader that just doesn't care, who's going to be able to put pedal to the metal and go. So I think I kind of categorize that in the same kind of ecosystem, simply because of how much systemic change you're going to bring about if you get it right. And I think that with it carries a lot of responsibility. But I mean, the attempt is valiant, and I think following the story and seeing how they do would be really exciting and interesting.
To your point, I mean, relative to the other sort of acquisition, the other sort of investment stories we've covered, in this little segment, 6.6 million sounds like a lot of money. But when we start to sort of quantify what they're trying to do, and the sort of size of the Goliath they might be up against potentially, then you start to realize
that's peanuts in that context. It's absolutely peanuts. So so that's probably going to be more of the issue, is whether they can capitalize so that their balance sheet and their network is able to carry them. But a lot of navigating, and hopefully they have a very strong person who understands policy and relationships.
Rushil, I'd be interested to hear your take on macro acquiring OneDrop. Given your consulting background, I imagine you may or may not have been, in a position to sort of advise a client in this position, given how you've worked in FMCG at the highest level in terms of consulting. What sort of thinking goes into well-entrenched big box retailer like Macro buying a startup?
I think it's you having the questions around where's growth going to come from. Now you can do that either by reducing prices, driving feet in store, but then that comes with an associated cost, right? So every person that comes through the store needs a salesperson to consult, a cashier to check them out. You've got to hold stock. So where do you drive efficiencies? And e-commerce online, as we know in the developed markets, is a huge component of business, but I think in South Africa it's just not there yet. Still, the stats are that 1% of trade is online. Of retail trade. 1% in South Africa. But it is growing, and I think I did this when I was studying. We did a study with Google looking at different market maturities, and you look at how, as internet penetration increases, theoretically e-commerce also goes up.
Yeah.
In South Africa, we have over 100% mobile penetration. I don't know where the internet penetration is sitting. It's pretty high.
The continental average is at like 20%.
Yeah, but I think South Africa is probably
slightly
disproportionately
higher. Yeah,
but we haven't seen that growth in e-commerce yet, and I think the big reason, and this is just my opinion, is logistics. South Africa, the delivery locations are just too far apart. So paying 100 rand, 200 rand for delivery just does not make sense when your basket size is 500 rand or 300 rand, whatever it is. So having one drop or
that's right.
Come in, try to get to scale and drop those prices, then makes a lot of sense.
Yeah.
And when you have that immediacy of going from 3 days, did you say, to 3 hours?
3 hours, yeah.
That's a complete game changer.
Yeah, because I mean, they already offer multiple delivery service levels, including stuff like on demand, after hours, same day delivery, all at discounted rates for business customers in major metros, Cape Town, Johannesburg, Pretoria, Durban. I imagine a macro applying themselves to to sort of delivering well on that mandate, in addition to being a great retailer, or or continuing to be a good retailer, probably quite difficult.
Yeah, I've got on good authority, and I can't tell the name of the retailer, but I've got on good authority that there's only one retailer in South Africa that online sales surpassed in-store sales.
Wow.
And that retailer is very niche. And coming back to some of the barriers that I think you're mentioning, Rushil, I think if you've got a niche offering, and that niche offering has positioned you with a particular market segment, I think it's easy to build value. Macro is not a niche play, right? Yeah. Macro is a mass market thing. So when you decide to go one step to the left, you're going all the way to the left. You know what I mean?
Right.
It's not you can't have a half-hearted online delivery play. It has to be all of everything. And I think that carries with it historic costs. So I think the acquisition of a one drop is hopefully to try and circumvent that. And from the stats and the report that they put out, or the statement they put out, is that they had pleasing results as they've run a test. What pleasing results means, we don't know, but
I hate it when they don't tell anybody. What's up with that though, guys? Am I the only one who finds that so annoying? I know we get a lot of feedback on this particular issue, people going, Andile, you're so right, like what's with people not sharing numbers? I don't get it. And I mean, you're a VC. I've been all over your site. I can't quite tell like how much you've sunk into like the 3 odd investments that you've made. Is that strategic? Why? Like, why are we not being told what's the I know like once the cat is out the bag, there's all this pressure. I get that, but surely, I mean, if we start to create a culture around doing it, it won't be that bad.
I think from our perspective, and the last deal was a good example of that, where people are asking us how much did we invest in G-Step, and it becomes difficult because then that becomes the benchmark, where the deal mechanics and the nuances of the deal may change the valuation.
Well, they come on podcasts like ours and explain the nuances. You know what I'm saying? Like,
but the consultant who's doing the research to understand what the multiples are is not going to listen to a podcast because they're crunching and trying to get something out in an hour, and they just look at, I don't know, Thomson Reuters to see the different multiples, and then that.
So there's a competitive advantage right now to like keeping your cards close to your chest.
I don't think it's a competitive advantage. I think it's just trying to not distort the market with information that we'd never give you full information.
Yeah.
And without that, then you can't make an informed opinion.
Okay. Well. Yeah. Look, I mean, it's one of the better explanations I've heard. I'm still not happy. But I'll let this one go, Rushil. We don't want to get you sweating for no reason. Yeah, but I mean, it would be nice, wouldn't it, Musa, for us to know, for example, what one drop got out of this. Because also there's a science to the corporate absorption of startups, you know what I mean, versus, because I mean, they now essentially own this business. It'll be interesting to see how that affects the relationship OneDrop has built with some of its other clients. Will it truly, as they say, continue to service anyone and everyone as they have up until now? Will it quietly become really just another division within Macro? Will Massmart make a decision to make this a resource exclusive to its group? All of those things I think are interesting for us to understand in terms of like a startup's trajectory, and where things go and how things work even after a massive acquisition like this at a sort of corporate level or corporate absorption level.
I think there is precedent for this. You look at what Take-A-Lot when they acquired Mr. Delivery. What did they do? They brought Mr. Delivery all in-house, and then I don't know what they're doing today. Are they outsource some delivery to other companies? So there is precedent for this, and if we can follow that trajectory, Macro can learn some probably valuable lessons from
we can
that.
all learn. I think there are founders everywhere who might be wanting to be in this space, who might understand better. Anyway, shout out to all the people we've mentioned in this particular segment. Call it the acquisition segment. I know there are tons of other acquisitions. People are like, you didn't give us a shout out, we didn't give a shout out. Guys, that's why we call it highlights. We pick the things that have piqued our interest. That we think
the things that did the things, man.
Did the things, man. Like, not that everything else isn't worth talking about. So shout out to you all. If you took money and you've extended your runway, good for you. All right, please don't send us letters about that. Okay. All right. So Kenya next, right? So Safaricom is definitely flexing its mobile money muscles, but in interesting ways, perhaps to what we've seen them do in the past. They seem to be keen to take on the likes of Jumia for e-commerce dominance. During their half-year results announcement recently, Safaricom told everybody that Masoko.com is officially a thing, an Amazon-style platform that allows vendors to basically enlist and, Amazon/Alibaba, I guess. And a lot of people, in the blogosphere going, whoa, look out, Jumia, here comes Safaricom. But I think there's something to that hype in the sense that, Safaricom looking for ever more ways to leverage this, M-Pesa success of theirs. And I think they're realizing that that advantage they had on everybody, probably say even just a year ago, slowly but surely beginning to erode over time. We first heard of Masoko back in July. They told us what to expect. The Safaricom CFO saying at the time that Kenya has this huge untapped potential for e-commerce, basically dissing everyone else who's currently in play. But I thought this was quite an interesting vibe, guys. What do you think?
I'm on the site right now. I love this.
It works, right? I like the vibe.
No. I'll tell you what I love.
What do you love?
On the top right-hand corner, there's a banner that says, get a healthy 130-kilogram cow for 500 Kenya shillings.
Yep. This is Africa, right?
Right underneath that, it says, get a full goat and 3 6-packs of Tusker, 4 liters of soda and spices for just 500 Kenya shillings. I love that. The product mix is amazing.
The product mix is incredible. These guys are going C2C, B2C, C2B,
that's great.
B2B.
How do you deliver that?
That's great. I don't know. Exactly. I don't know, but that's great. I love that. And
as they say in my language, Oksalayo. What stays, which is the direct translation. Be that as it may.
Yes. No.
Safaricom is at this e-commerce party and they're flexing their muscles. I don't know. Maybe Kenya, you tell us. Kenya, what do you think of this brand new offering? Is this the platform y'all have been waiting for? Has everything available up till now just been whack? Have you been dying to buy a cow online? It just hasn't been possible. What on earth? Are you excited about this thing? Tell us. Give us a shout on Twitter or Instagram at African Roundup, or give us a shout on Facebook. It's facebook.com/African Tech Roundup, or drop us an email, or even better, send us a voice note via email. It's hello@africantechroundup.com. So not to be outdone, right? Jumia, quote-unquote Africa's first unicorn, is expanding a small business loan program into every country where they currently operate. I thought this was pretty smart. They've partnered with Branch, the San Francisco-based lender, the fintech firm, and they've already started offering small businesses startup loans. They started back in May. Roughly $290, 6-month terms, interest rates of 1.2% per month. I see sneaky positive potential here. You made a face, Musa. You're not sure.
Yeah, I'm trying to see how this fits in, right? And maybe it's just opportunistic. Is this replacing? Is this augmented? I'm not too sure.
So Konga, Jumia's biggest rival in Nigeria, from what I understand, investors weren't happy with their reluctance to sort of force people to pay upfront for products, because they sensed that the Nigerian market had to build trust in e-commerce, and for the longest time, Konga delivered things and people would pay when things landed, right? You can imagine the sort of cash flow nightmare this created for them. And so they bit the bullet recently, and they've just started, listen, if you're buying, it's upfront, pay for the thing, it'll come, trust us, this is the internet, it works. I'm sensing a renewed focus on the actual cash of the business, as it were, like the blood flowing through the system, the liquidity of e-commerce, is making an argument for its fundamental sort of viability.
Artificial liquidity,
if you will. And I think Jumia making a play, for what's really a lucrative or an increasingly lucrative fintech market. They're looking for ways in. Safaricom's not content to stay in their lane as a mobile telco or as a sort of fintech player, mobile money player. They're coming this way. Jumia's like, no, we're going to push back. We're going to offer people, they're shopping here already. They already trust us. We have a brand they like. We can make friends with some of the best in the business and offer them what they need all in one place. Maybe it makes sense. I don't know.
Yeah, the only thing in my mind is maybe, as you said, maybe as an artificial way to bring liquidity into the online space, and at the same time trying to achieve the deepening of relationship thing. So if you lend to someone, it means that you've got to you owe them when you know who they are, and you know what I mean. So when you go online and you're going to redeem or buy, you're not starting to ask the question who this person is, right? And I'm just thinking about it in terms of how you develop a relationship that gets around trust. That's the only way in my head I can potentially see that working, right?
Well, it's just an experiment. Who knows? Like,
if you wanted to improve the liquidity, then you'd finance the product rather than offer loans.
Yeah.
But to the point you're making, I think that's part of the whole thing, where it's like they're now in a position to offer you credit. Where I don't know what it's like elsewhere, but I know the furniture business, for example, the retail furniture business in South Africa is not really a retail furniture business. It's really a banking business, right?
Yeah.
So maybe in the spirit of, hey, you guys are already shopping, perhaps you can't afford this expensive perfume you're already buying. Hey, get it over Christmas.
That makes sense.
We'll give you some.
Not offering cash loans.
So maybe it's not a cash loan business.
So the headline says Jumia expands lending program for small businesses across Africa, right? Yeah. Then it says the e-commerce company in Sub-Saharan Africa is expanding the small business loan program into every country where it operates because they're trying to offer start-up loans for small businesses.
I met one of the founders of Jumia. It was one of the Francophone countries. I can't remember which one. But basically the founder that took Jumia into those countries. And really how they built the business in part was by finding a super user in certain areas. And what tended to happen was the business was propped up by a sort of small army of super users that tended to turn into sort of mini retailers in their areas. So they bring on board like certain individuals.
Trying to replicate building mini super users and then...
Exactly. So you're a super user who now buys sort of tissue paper and pads at like ridiculous rates because you're buying them directly from Jumia at slash prices, and then you in turn sort of retail them to your neighborhood or whatever it is.
Interesting.
So I know that has been quite key to them opening up certain markets. I know certainly in smaller Francophone nations.
So the network effect of giving a small loan means that you'd be able to buy product. That product will be able to be used almost the network effect, right?
Yeah, maybe now it's Christmas time. You know how long it takes for product X. I don't know. Maybe people need a ton of cooking oil or margarine or sugar or whatever you need in the village or whatever it is, and you don't have the money to sort of buy it all up front and make sure that you have enough to supply the village or your neighborhood. But thanks to this vendor loan program, you can. So I don't know. Let's see. I mean, again, is this working? Are you a vendor who's on this program? I believe so far something like 200 vendors have applied for and received loans via this new program. Is it working? Is it helping you? Have we articulated it correctly? Do we have no clue? Tell us. And let's stick with e-commerce for a bit, because how about this? Haven't you guys wondered, like, where the heck is Alibaba in terms of like? We see eBay sort of partnering with certain people, in West Africa. We see, we know Amazon's on the continent in millions of other ways already. Alibaba, one of the world's biggest sort of e-commerce players, like, where are they on the continent? Have you wondered? Well, I did. Guess what? It looks like Alibaba Group is bringing e-commerce to Africa, beginning with Nigeria. Surprise. Now, that makes all the sense in the world given the size of that market. So shout out to you, Nigeria. Souvenir.com, apparently. A friend of the show, Aaron Fu, he's the new managing director at Mest, formerly at Nest, recently spotted an announcement made in Chinese via the Chinese Nigerian embassy website, saying that, Alibaba was now in some sort of strategic partnership, whether it's like there's an acquisition or like a part, like clearly they're experimenting or at least researching what to do here on the continent through this. How does that make you guys feel?
It certainly makes sense because wasn't Jack Ma sniffing around Rwanda in 27? Yeah.
Yes, bruv.
Yep.
Yes.
So it's,
yes. He was here.
He was here, right?
He was here.
I suppose one, it's good that he's made good on his intentions, but two, it's believable because of that. I think Alibaba have got a big balance sheet.
Yeah, like what are they not doing here? Like it doesn't actually doesn't make sense that they're not already here in some big
exactly. Where art thou Alibaba? We should start a hashtag.
Where art thou?
Where art thou Alibaba? Then and he's also supporting a bunch of entrepreneurs, I believe.
Yes,
like $10 million or something like that.
Yes, he promised, right? He did promise that the Alibaba Group, in partnership with the United Nations Conference on Trade and Development, UNCTAD, that they would host this ongoing class, a rolling class of African entrepreneurs who would visit China 2 weeks at a time for these intensive courses. You know, the first bunch have gone through. I'm hearing good things. I'm looking at the blogosphere. People are, he's actually meeting with them. They're getting to see how Alibaba works. They're being introduced to like the fundamentals of e-commerce, Chinese style. You know, he's promised up to 1,000 entrepreneurs in developing countries, and including those on the continent, will benefit over the next 5 years. So, shout out to you, Jack Ma.
Yeah, man, do the thing.
Yeah, do the thing. Do the thing. And then, of course, I mentioned, back to South Africa briefly, guys. Your sense. Big tech in Africa, big quote-unquote African tech is not doing well right now, just in terms of like the headlines just fielding bad PR. Whether you think Naspers, and we don't have time to get into it. I mean, just Google what Naspers is going through, and they're being investigated for a couple of things. It's all very embarrassing, given they're the continent's biggest tech firm by market cap. And so there's Naspers, there's EOH, which just in the last week lost something like 40% plus of their market value on the Johannesburg Stock Exchange. Steinhoff. Then there's Steinhoff, which isn't technically a tech firm, but goodness me! Oh my word, Steinhoff! Oh my word, Steinhoff! Oh my word, Steinhoff! So many big sort of retail brands here on the continent, abroad, as part of that stable. So much corruption, guys. Just your sense of where big tech is faltering. I mean, last year was the year MTN just bit dust and like just took it from all sides. This year, I mean, they had some issues in Benin and other things, but more or less their PR improved, but big African tech is struggling, I think, in terms of PR terms. Also, just in terms of the fact that it's unfortunate to see like how they lack integrity in many ways that we'd rather not see them fail.
I think it might be old school leadership in a new school world. Like, the things that are really important to making technology businesses work, the kind of principles that need to be applied to be a leader that makes sense to an organization in this day and age that's technology related. They're fundamentally different to old school principles of leadership, right? And there is obviously a huge sense in technology businesses that there's a lot that they can do and get away with, just because of the size that they are. I don't think there's a real sense of accountability. I think a lot of them get to the point where if they ever do get caught, or if they ever have been caught, which obviously has been happening, they just pay the piper and move on with their lives, right? Yeah. So, and that isn't, if you look at new school leadership, that is fundamentally wrong. Like there's just no way you can identify with that notion. Fix the problem, don't try and put lipstick on the pig. So I think this old school kind of way of leading and this new transparent and more demanding, when I say demanding of leaders as leaders to show up as leaders, I think is creating cracks. That obviously compounded by the reality of economics nowadays is that you have to be really smart to get value out of this ecosystem. You have to be able to connect unrelated dots, and you have to be able to find efficiencies where they may not have existed before. And once again, maybe that's a skill or maybe that's a leadership thing, but in a tech business where you've got people who weren't native to social or to whatever is going to become augmented reality, whatever is going to be the world we're moving into, you're bound to have these kind of missteps. And the solution.
Are you taking a shot in part at the fact that so many of the implicated leaders within, and it's not just tech firms, but tech firms have taken a massive bite. I mean, I haven't even mentioned SAP and some of the consulting firms. Thankfully, your alma mater, Bain, Rushil, and so far really doing quite well in keeping themselves much above some of these lower unfortunate dealings. But a lot of the executives implicated in these issues,
they come
chartered accountants.
Correct. Well, that's one thing. They're chartered accountants. These are not young men. They're not. They come from a very particular age of leadership. Yeah. They come from a very particular discipline of leadership.
And shout out to you, Stellenbosch. No, I'm kidding. I'm going to get so much flack for that. So much flack. It's not just Stellenbosch, but I mean, okay, let's just move on quickly.
But I think there's an archetype of leadership that is going to be faltering because of the way the things have shifted, right? And once again, I mean, you'd assume that there'd be young Thundercats making these mistakes, but they're not. These are old, seasoned, investable, risk-free executives that are senior and that have done this for the longest time. Yeah. And that very thing is the reason why they've got a problem, is that the stuff they've been doing for the longest time, there's a saying, when the wave goes out, you'll see who's been swimming without their underwear, right?
Wow.
And so the wave comes back out and you see all the people that have been swimming without underwear, and unfortunately it's a very particular archetype of individual.
Rushil, I know you're free to sort of skip a topic if you don't want to talk about it, but bruh, it's quiet over in this corner.
I think it's just so risky too.
You're like, I'm trying to invest. Yeah. I'm homies with Bain. They've got clients. I'm not trying to get in trouble. No, I totally get you.
But I think it's what's the role of business? And I think it's sort of changing where before it was all for your shareholders, we're all creating shareholder value, and that's our focus, and that's where the leadership mentality is. Whereas now, I think business has more to do. It's more for society, for the environment within which you operate. And again, to the transparency that social media has allowed us all to have the same conversation at the same time, rather than a few people knowing about certain things. So I think, yes, it may have always been going on. It's just now coming to the light a lot more. And as business models change, hopefully we start seeing less of this, or leaders becoming more accountable and responsible in the way that they do business.
And I'm throwing the baby out of the bathwater. I think, and I say that respectfully, I think these are big organizations, man. Like, these are not small spaza shops, number one. Number two, they've been doing this for a long time. So all of their peers and all the people within that ecosystem, in my view, are very similar. It's just that they haven't been caught yet. When they do get caught, they'll get a slap on the wrist and maybe we'll move on with our lives. But I kind of, I'm quite pessimistic about it.
It's been a bad year. I mean, there was ABSA, there was... And I mean, just in fairness to EOH, EOH Holdings, of course, the IT service management company, I didn't explain that their stock dropped. What they've come to market with, and they're trying to explain this, is that it's due to what they're saying was a forced sale of shares by financial institutions against equity finance transactions, which is really just a lot of words. But yeah, I mean, I suppose they've come out sort of explaining that there's sort of sensible business logic to why we
not a chance.
No. This is what they're saying, right? There's business logic to it, because this is distinct and unique from us being implicated in the Gupta leaks, and we don't want you being confused with what's going on at Steinhoff right now.
What?
But yeah, this is totally
where director takes out the leverage position on his own company to those values.
It's business as usual, bruh.
Stock drop, shut him down. No, man, that's nonsense.
So no. So I was trying to play devil's advocate for 2 seconds. It didn't make it work. But yeah, no. So it's been a disappointing year. Actually, it's been a disappointing couple of years for big tech. MTN leading the pack out there. Everyone involved with the hashtag Gupta leaks vibe.
But can I interject there? Because I think with every good crisis, never waste a good crisis, right? So because it's been so disappointing, and I'm going to put on my...
Come on, Brad Maven!
Yeah, because it's been so disappointing, it's creating a real opportunity for young CEOs to rise up and show them how it's done, right?
Come on, Bridge Labs, come on, Venture Capital, come on!
Exactly, right? So it has to happen. It's part of the shift, it's part of the change. And yes, we sit and we, sometimes maybe a little bit pessimistic, but within that, there's an amazing opportunity for all the guys that are out there doing the right thing and doing it correctly, building shared value, building great businesses. You guys, the time is now. Like, we need to be in the space. And if we're not going to step up and say, well, you know what, we've got an alternative to start off, and we can do just as well, if not better, at half the cost, at a better efficient, whatever it is. But I think it's creating that opportunity. So let's not look at it as just a crisis in leadership. Let's say it's a fracture that allows the good, or the good is wrong, the next generation of leaders to be able to show themselves. So
come up to the wicket. Come on strike.
Absolutely.
So here's one of the sadder social media posts. I think it was on Twitter. I saw someone share, and it was so earnest. The guy was like, dude, I cannot believe it. Same time this year, a financial advisor, a wealth manager, advised me not to invest in Bitcoin and to go all in on Steinhoff.
Wow.
Someone actually shared that on the Steinhoff hashtag, and I'm thinking, so that's if that there couldn't be a better segue to what I'd like us to talk to next, and we're sort of officially now in the international news segment. Bitcoin, people. Bitcoin, people. Oh my word. Come on, make it rain. I mean, goodness. I mean, we sat here like 2-3 months ago. Musa at the time had this ridiculous paltry sum of like $120 or something.
Now 250. Come on, get with it.
But I mean, just how far we've come in like flipping a quarter or two, in terms of like, the debate was initially, is this like a legitimate sort of asset class? Is it a bubble? Is it gonna burst? Is it what? Is it a real currency? Is it only good for like storing value? Is it? Oh my word! Like, I don't even know what to think anymore. Rushil, like,
I'm glad I'm not the only one then.
but seriously, like, in your mind, firstly, question one: is this, in your mind, a legitimate asset class at this point?
I don't know if it is. And you said invest in Bitcoin.
Yeah.
What are you investing in? Is it ones and zeros? And again, I know you're probably going to get a lot
my
of flack.
problem. Yeah,
You're going to get a lot of flack for what I say here.
but I'm
don't
interested in
understand.
your perspective, because you come from a slightly different world,
Yep.
so unpack that. When you say that, like, what do you mean? You're asking me the question to make a point, which is,
if you are investing, or if it's a store of value, what is that backed up by? Is there a balance sheet? Are there income? Is there dividends? Or what is that? Or are you just betting on the price increasing because there's a limited supply and increasing demand? I always thought Bitcoin was meant to be a transactional currency, but at these prices and looking at the values going through, it's 3 transactions per second, which is very little or something compared to what Visa does. So it's not really transactional.
Yeah.
So I don't understand it, and I told Brendan before I come here, I said, I hope they don't ask me about Bitcoin. I don't know what's going on.
And I mean, none of us really know, let's be honest. And I mean, I love it because it's also new. And Simon Dingle, who's our mate, who's probably the most knowledgeable Bitcoin person, who's a friend to the show at this point, he's the first to admit, despite all he knows, how little everyone knows. And I think that's part of its appeal. But to answer your question, to me, Musa, and correct me if I'm wrong, what am I investing in? I'm investing in a currency that's rooted in the blockchain, which frankly, to me, is far more trustworthy, a sort of point of reference than sort of some old men in the US sort of dictating why a US dollar is worth what it's worth. Okay, so on that sort of very simplistic level, as a currency, I'm like, okay, I prefer that, idea-wise. Okay, so this isn't, because I'm not hugely invested in this currency or anything. But in terms of like the ideals that drive this thing, like, I like that idea. I also get the fact that there's limited amounts of it. So I can understand that as a limited commodity, the market dictates what if willing buyer. I mean, I also see its benefits in terms of like cutting out the middleman. All the arguments that we've heard before. Like, why have we been okay with all these intermediaries for so long? Like, I'm not saying they've all been rubbish, but they've all been rubbish. But I mean, by and large, they haven't served humanity, in the way that they ought to. And I can understand why they're not sufficiently motivated to do the right thing all the time. Yeah. And here's the sort of democratized thing that, at least in spirit, like, suggests that we could be better people, and we could get this right. And I know that's a very naive view, but I mean, when I think when someone says I'm investing in Bitcoin, I'd like to think, aside from the fact that they think they can get rich quickly, I'd like to think that's what they're buying into. I don't know, Musa, you got into this a little earlier than I did.
I got into it purely because of curiosity, but
just to know how it works a bit.
And my limited understanding, obviously, so blockchain being it's a really sophisticated way to store records, and lots of records, and at high volumes, and with super security, with crypto, right? So and through those records, you can do a lot of things, and one of the things is you can transact. So that's where cryptocurrency comes from, and that cryptocurrency network that allows you to be able to democratize blah 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 is what's super appealing, because obviously the net value that comes back to the end consumer is a lot higher than what they're taking out. So I also subscribe to that. The question is, if you look at the implication of things like Bitcoin and Ethereum and the rest of it, is I think there's two views. The first view is based on speculation. Is we're seeing, because of limited demand, the value kind of tripling and doubling and doing all sorts of amazing things, and there's a speculation reward that can be associated, which I think is going to be fairly short term, right? And yes, the reward will be there, but it's not going to be for anyone. And I think Simon also pointed out that it's not going to go on like this forever.
Yeah.
But what is exciting is the underlying technology, because you won't be able to undo that overnight.
Yeah. Or at all. Ever.
Exactly.
Yeah.
So it's kind of like a fundamental shift, transactional shift, but it's more kind of the kind of the chassis of the engine as opposed to the headlights, right?
Yeah.
So the question is, when you start to build on this engine, what are the possibilities? And that is exciting.
Yeah.
And I think that is probably a more sober and long-term view on the opportunity. And then it goes outside of currency. It goes into a lot of other things relating to correct, right? Record keeping, blah blah blah.
Mapping countries, flipping,
correct. DNA storage,
property records.
Exactly. So I think that is really where the opportunity is, and I think a lot of people, I think some that are clever are starting to figure out which companies are starting to tinker there, because that's where the long-term value is, and those that are kind of getting a short-term, and there are guys that are making a lot of money right now, very short-term, but the question is, and my view is probably, I give it 6 to 18 months, between 6 and 18 months.
Yeah.
We'll start to see that number starting to fall, and it's starting to equalize a lot more.
Yeah. I mean, 18,000 is what it surged to after it began, after sort of Bitcoin futures started trading. The site actually, I mean, this was the sort of first major global exchange, in the past week started trading Bitcoin futures. People are just going nuts. Oh my word, the site actually, crashed. Does this somehow help legitimize the issue, or does it compound your problem
I think
with it?
It compounds my problem, because the futures are, I think at last I checked again this morning, was $1,500 difference to the actual Bitcoin, right? So in an efficient market, you just arbitrage the hell out of this and make a ton of money. But it doesn't feel like an efficient market, or it's yes, the price is being set by the demand, but there's something that I just don't quite get.
And I'll be fair in saying I don't get it either. And he's a smart guy. He's like, he's with Bain. He was with Bain. They don't hide it. So, Africa, we want to know how you feel about this. I mean, there's a proliferation of exchanges. There's not just Bitcoin to speak of. I think Bitcoin is really now just the poster child for the crypto industry. Bitcoin and Ethereum, by and large, the biggest names most people know, even if they know nothing about blockchain or cryptocurrency. And for that reason, we discuss them. And to qualify everything I said before, I'm not a huge Bitcoin fan. I'm not sitting here with tons of my family's money in it. I do like some of the fundamentals that back up its existence, and etc. What do you think, Africa? Give us a shout. What do you make of this whole Bitcoin thing? Are you playing the futures exchange now? How much of your family's life savings do you have in Bitcoin at the moment? A business, I'm not even going to mention his name, not because I'm being mean about it, but I don't really remember it. But some agency in Cape Town actually reached out to me via DM. It's a fairly large agency with 30 people, etc. They've been bought. They've been partially acquired by a UK investor, and the whole transaction happened on Bitcoin. He's like, please push this, talk about this on your show. I was like, how much is this transaction worth? He's like, no, that's not the story. See, you're not the only one of that thing. That's not the real story. And I'm like, actually it is, because I have questions about tax issues. I've got questions about where is this company domiciled? No, we're definitely a South African company. Well, then I'd love to know how SARS looks at that transaction, and because that to me is the conversation. Like, how is this going to impact our lives? We're sitting here talking. I'm sitting here sort of waxing lyrical about the sort of ideals that this crypto wave represents, but in real terms, like, how are governments, our sort of financial industries, how our business, how does it affect Musa if one of his startups are technically acquired in Bitcoin right now, right here, right now? Like, does that make a difference? Is it better for your business? Is it better for your investors? I don't know, but I think that's where the story's at, and that's why, my brother, I know you're listening. I've forgotten your company. I would give you a shout out. I just don't have it in front of me, but it is an interesting story. When you have more information to share, circle back. Just a few more things real quick. I just want your immediate responses to Uber being caught cheating. As it turns out, there was a major hack data breach, in fact, affecting 57 million users. of Ubers. They didn't feel the need to report it, of course, because look, they did the right thing. They reached out to the hackers and went, "Hey, you guys are really good at hacking our system. Maybe you should help us protect it." And we have this little program that allows us to engage with people like you. And therefore, we've done everything we need to do as an entity of our size and scale, and we're doing the responsible thing by really just partnering with you and making sure that this doesn't happen again. And because we've done this, people like Andile and Musa, who use Uber every day, don't ever have to know, right? Come on, guys, how do you feel about that?
Musa, is this a young CEO who has messed up now?
Travis is such a bad example, though. That's so unfair.
Travis, he's an outlier.
He's an outlier.
And he's gone, by the way.
So they say. Some say Tupac is dead. Some say Elvis is history. I don't know. Some say. So, but yeah, like, just what do you guys feel like in your gut? What's your immediate reaction to that story?
I hate all these data breaches. I feel like consumers need to put value on. A lot of people say, "Oh, but it doesn't affect me."
Yeah.
No, it does affect you. It affects your family and your friends, and how that impacts you. And even in the US, with the credit card agencies that got breached, and half of the US social security numbers or whatever it is.
Horrible. Or Hertzner with their data breach and going, "Oops, hey," and your passwords weren't even encrypted. Oops, our bad. You know,
I don't know. As consumers, we should put a value on that, and then have the discussion.
Yeah, it's a tough one. Hey,
you just at loss.
Yeah, look,
at a loss.
Look, I think the sanctity of data can never be compromised. Let me start from that perspective. So the corporates should be held to the highest account when it comes to data and the protection thereof. The reality and the problem is that for a consumer, if the perceived value I'm going to get by giving you my data is higher than the perceived cost of the breach happening,
it's all good. It's all good.
You know, so that becomes the problem, right? And because of that, like, there's great service. I mean, Google's is a classic case in point, right? Is it adding value to your life to know that when you're sitting in a room doing a podcast, Google will then say to you, "Why don't you go down the road and grab some pizza?" Is it valuable? Yes, absolutely, because I might be hungry at 12 o'clock. But for them to be able to do that, they need to understand and know a lot of stuff about me. So when they say to me, "Is it okay if we can access your coordinates?" And I'll go, "Of course, because you're going to give me value."
Yeah. Can we suggest responses for your emails? Yes,
of course.
Guys, it's scary how I've gotten so... How cool is that feature, though?
Yeah, sounds good. Yeah, see you soon.
I'm guilty. I'm guilty. I don't know. Like, thanks, can't wait. You're like, how did you know, bro? Like, see you soon. Thanks, can't wait. Like, wow.
Exactly. And this is where the problem is that the net value at the moment is still 9 out of 10 times going to be higher than the perceived risk.
Yeah, that's true.
Because number one, people are not educated about data breaches first and foremost.
Yeah.
The probability of them happen is small, is getting bigger. Maybe it's not even getting bigger. Maybe it's just now we know about it, right? It might not be getting bigger.
Yeah.
So that's where I kind of have a little bit of an internal battle. But I did start off by saying I think every organization should be held to the highest account when it comes to
I think Uber's going to be roasted. Right? I mean, the justice machinery over there is just sharpening knives for these guys. It's been a horrible year, Uber. At this point, I'm just feeling for them. I mean, going to the festive season with this hanging over their heads.
They need a hug.
Uber, you need a hug.
Hashtag give Uber a hug.
There's an app idea. Hugs on demand.
Or hug Travis. Travis, do you need a hug?
Yeah, well, they're taking me home. I'm doing my thing. It's all good.
Yeah, right.
Yeah, I'm contributing to that. So, guys, the final story in this segment. And I've just had so much fun. I know we were supposed to get through this so much faster so far discussion, and we will have like a quick chat about why you are actually here. Rushil's like, why did I agree to this appointment?
Cryptocurrency, that's why.
Cryptocurrency, yeah.
Let's roast it.
Let's roast it for like an hour before we actually talk about anything.
Yeah.
But yeah, so finally, again, rounding off our international sort of highlight section, the US is all set to abandon net neutrality. The FCC, of course, has come out explaining how net neutrality will be protected without the need for net neutrality rules. Guys, listen, your ISP is going to do the right thing here. All they're going to do is going to charge other people for much faster speeds than you currently enjoy, much faster. And they should have the right to charge a premium to large companies that can afford faster speeds. It's not going to affect you at all. And who needs rules to do? They're just going to come and sign a little document saying they promise. They promise. Who needs rules for that? Target. So by the time you listen to this, I mean, we're probably a day or two away from what at this point is unlikely to be anything but US lawmakers basically dumping net neutrality rules. But most people will listen to this way after that. That'll be history. Like, net neutrality will be the thing we'll be looking back on. So guys, final take. How does this make you feel? Who needs a hug?
Everybody needs a hug. Mark needs a hug.
But some people, cynics I've been picking up on social media, but mates of mine actually, shout out to you, Peter Pile. He said this to me ages ago. I think he even wrote an article on it a while ago, going like, what net neutrality? If we're talking on the African continent, like seriously, like what net neutrality? Where's Facebook not sort of like trampling all over that? In his mind, like, come on, that horse is bolted. I don't know. How do you guys feel? Do you think that's true?
I do think the horse is bolted, and I think the net neutrality conversation is really one about consequence. I remember there was a statement released at some point by Mark Zuckerberg, speaking obviously out in favor or against, net neutrality.
Oh, so you know how I've totally forgotten that Musa used to work at Facebook. By the way, Musa is like was employee Facebook Africa employee number 2. Just so you know. Nice. Alright, so he might know a little something about Facebook. But tell us about your former boss's take on the matter.
The former boss's take on the matter was, the pipes that get laid down will get laid down by those that have money, right? The money and the infrastructure to be able to lay down those pipes. What then goes to those pipes, ultimately, for a period of time, is going to be adding a whole lot of incremental benefit to the people on the end of it, especially in the Africa context, right? So access, so you lay down infrastructure, then give people internet access because they can search for jobs. The immediate benefit is super high. The consequence over a longer period of time is where the problem comes in, right? And his view kind of stopped at the immediate benefit. He said, well, you know what? Obviously, people are going to be able to access stuff. People can share. And I get that, but it's a very fluffy view. My view is further down the line. Now that people have developed and they've gotten more sophisticated and they've been able to provide information, they've been able to give unfair insights en masse to these big pipe
You've
providers.
sold them gunboats and ammunition.
Correct. And then you got
some beads. You know what I mean? They're happy with that for now. Like it's all nice and dandy.
Correct.
But later on, they realize, hang on, my land. I might need that. And that might be useful.
Correct. And I think that is probably where and that's not a short-term view. It's a long-term view. And it comes down to also being, I suppose, in Africa and having an African interest at heart, is that's typically where a lot of advantage is always taken, is that you give someone a gun and you say, no, this is just to protect your home. And then all of a sudden you say, no, we got to go and protect your home from those guys. Meanwhile, those guys are not even, and then you're using the gun, but you were given the gun to protect your home. You're giving information to better your life. Not all of a sudden the information, so
being weaponized, it's like, what?
So that's where I've evolved my thinking a little bit to be, pessimistic is the wrong word, but more cautious. I know a lot of the bigger platforms and the bigger supply side organizations, Google, Facebook, have been hugely in favor of it for obvious reasons. But I think
the ISPs, really what we're talking about on the continent, we're talking about the fact that ISPs, or just let's say tech giants in general, tech giants that will be not the arbiters, but basically control our access to tech infrastructure. They will now be in a position to offer the highest bidder the best possible service, except that we're banking on their goodwill. They will be in a position to just offer, the poorest of the poor, or really the rest of us, the average of us, really whatever they feel is deserving of whatever peanuts we can afford to give them. And that's really sad, because we're going from a place where an almost equal opportunity, even at least in principle, at least an ideal and equal opportunity scenario, to one where we're just allowing barons to own access to what's becoming a super vital resource. So Rushil, you've been quiet, and I understand. Like, Rushil's just tapping his lips going, oh boy.
Tech is not my world.
No.
Also US.
And we always tell our guests, listen, in this section, you really say as little as you want. So no pressure, really.
No, I did have a point about what does that do to innovation then? Because obviously Facebook and Google and Netflix will afford the fattest pipe and the most information. What happens to the companies that want to take them on? Then do we just get stuck with the status quo?
It's interesting because you almost start commoditizing the wrong word. You almost start to monopolize innovation in a way, because ultimately innovation of the future is going to be data, right? And how much data you have and what you can do with that data. So I think that's kind of an unintended consequence of net neutrality in its in its truest sense. Is that a monopoly going to create, like oil, like gold at some stage, is going to be further augmented by, as you said, these fat pipes being owned by specific
And we
people.
just got. I mean, the undersea cables just landed on the continent. It's not as though we're not struggling as is to improve penetration, and we're already being anyway. It's fairly upsetting. America, do you whatever? Moving into our discussion. Yeah, I don't mean that. I obviously mean I hope you do the right thing, but I know you won't. So hey, what else can we do?
Sorry, not sorry.
Sorry, not sorry. So. It's, again, one of the longest episodes we've had in a while, and I'm not sorry. Here's what, Rushil is here to talk about. To set you up, Set Your Capital is your baby. You and your founders obviously have this quite privileged academic background, privileged also because you've worked at arguably the world's top 3 consulting firm, at least Northern Hemisphere consulting firm in the form of Bain. And you guys basically drop out of that amazing setup to do the unthinkable, which is, apply yourselves to early stage venture capital on the continent, starting with South Africa. Musa and I sense that your company has, in principle, a lot of some of the healthier outlooks or approaches to doing the VC thing on the African continent. So give us a sense of what your premise is. Perhaps it's, your investment thesis. What are you here to do and how?
And this is where I can talk at length.
This is where we go. Okay, enough, buddy. Enough.
Set Your Capital was started with a view of helping SMEs grow. We've got 2 million SMEs in South Africa. A lot of them, if you look at the stats, maybe 3/4 of them fail within 3 years, and there's a lot of reasons for that. But still, SMEs make up 45% of GDP, then they employ more than 50% of the workforce. So we started Set Your Capital because we had, again, this privileged academic background, the great experience working with Bain and these multinationals, and thought what we've learned is more impactful at the SME level.
An SME, of course, being small, medium-sized enterprise.
Yep.
Okay. How big is that in your mind?
So we are probably on the small side of that.
No, in terms of like SME, like when we say that, what sort of turnover revenue-wise are we talking about?
I think the official definition is up to 500 million rand a year.
Which is
that's a sort of medium. Yeah.
Okay, so that's about $50 million on it. Yeah. Okay.
So we started Set Your Capital because we feel as we grow these SMEs, they'll be able to create jobs. And we're sitting with 30% official unemployment, probably around 50% youth unemployment. So if we could use our expertise to invest in these small companies, solve the top 3 challenges that they face, it being access to capital, management talent, and access to markets. Yeah. So the model's been built around that, where we invest some growth capital, unrestricted growth capital, in these SMEs. We second ourselves or interns to these companies for 9 months to do whatever needs to be done. We act in whatever capacity, set the business up for success. They've already gone 0 to 1. We now need to take them from 1 to 10.
Okay. So these are companies that are turning over a reasonable size.
Yeah,
they're most of them profitable. They've demonstrated success.
Yes.
So you're not taking people from 0 at all.
No.
Okay, so that's definitely not
because I
part of
think that's a different skill set to what we have. Okay. And again, in our consulting backgrounds, we never started up a business, but we helped businesses improve efficiencies or grow or whatever the case is. So we're using that skill set on an SME level.
And I like how you explained your role, like your everyday, like we're talking about, like what you do every day, and essentially you're an MD resource to like your portfolio companies.
Yeah.
As MD, etc., you are an MD resource too.
To the operating company. So whatever strategy work needs to be done, finance, marketing, whatever the immediate need, and each company is different.
Wow.
We
They're
go
getting Bain quality like consulting expertise at that level. Sure, that's
For free.
incredible. For free. As part of the deal.
As part of the deal.
Well, how much do you guys
of course.
typically invest in
So
these companies?
we typically invest up to 5 million rand,
Okay.
and looking at companies with up to 50 employees. So still fairly small,
Yes.
but with that growth potential where we can, when we go and implement a CRM system or zero accounting software or whatever it is, it has that much more impact for them
Yeah.
because we can do it on the ground. And the beauty of the model is that it becomes much more repeatable. So what we learn from operating company number 1 becomes twice as fast for operating company number 2 and 3. It's fairly similar-ish challenges that you're facing as an
Yeah.
SME. And we focus only on the consumer goods and agribusiness sectors.
And I can already hear some of our listeners going, what, of all the VCs you could bring for the last show, you bring, the MD of the one VC that doesn't actually invest in tech plays, which I mean, and to explain why, really, is because we haven't observed that many VCs operating in the way, we feel, at least in terms of approach, needs to happen in order to give not just the startups a great chance, but really to deliver on business value. And we feel like this approach would play well even in tech focused or tech heavy sort of plays. But just out of interest, like, why aren't you in that space? Because for some people it's like a no-brainer. I mean, why are the 3 investments you've made so far not tech plays, and why aren't you even looking in that space?
So it's what value can we bring to these operating companies? And my experience, Brendan's experience, has been FMCG agribusiness. So we know those worlds, we know how they work, and bringing that expertise to the SME level is a lot more impactful. We would love for this model to be replicated in the tech world with an expert in tech. I fully recognize what I don't know.
Would you take on a partner who came say, hey, I've got like $5 million.
Yeah. So Secha, what we're doing is we're building these playbooks for the things that we know need to be done in small businesses. How do you get marketing done? So with Musa, how do you get social media or Facebook marketing? What's the potential of that? How do you install these accounting systems? So we're building all of those playbooks, and once we have that can then be replicated into a different sector, a different industry,
Right.
with someone who is an expert there and can provide that operational expertise to that
Right.
SME.
So what do you think is not being done right in this space? Like, what did you guys observe as what was going on in the sort of VC space that you felt we're not going to do it that way?
So I think it's VC and PE.
And PE, fair enough.
So in the
Again, the distinction for our listeners, like, we're not finance.
venture capital is much smaller, earlier stage investments. Private equities usually full takeover of larger established businesses.
Right. And you guys you're happy with both? You play in both?
We only
aspire to both?
only take minority stakes earlier stage, but with the private equity model ish.
Okay.
So it's like this hybrid, weird model to explain in traditional terms. But I think to answer your question, the challenge that we saw with the private equity model is you have to raise 500 million rand because the traditional model is you take 2% management fee and 20% of profits above a certain threshold. So that 2% management fee needs to pay for your expenses.
Yeah.
Now, if you have a team of 5 people, 10 million rand is
It's not going to
Yeah.
cut it. Yeah.
So you're going to have to raise larger amounts. But then what that means is you have to go and invest larger check sizes.
Yeah.
But there aren't that many deals.
Yeah.
And KKR, I was chatting to Musa, just pulled out of Africa, the big private equity company.
Yeah.
They pulled out of their Africa fund because there just aren't that many big deals to invest in. But there are 2 million SMEs. So how do we change that model where you can write these small checks, but you're not incentivized by this 2% management fee or the 20%
Right.
outperformance? So that's how we try to change the Secha model. And then especially the operational support. That's a big thing where the founders are brilliant. The founders we've invested in have all been amazing. And
So what kind of businesses have you done so far?
we've invested in a natural hair care and skincare brand called Native Child.
Okay.
The second one was a biltong brand called Stoffelberg.
Which is built on, for those of you listening abroad, don't
Beef
know what
jerky.
that is. Beef jerky. big deal in this part of the world. Okay.
And then the third one was a footwear manufacturer called G-Step.
And so what would you say is the biggest impact since your participation you've observed in these 3 companies?
So I think
What have
it's
you-
how these businesses are changing the way that they operate. So again, on the financial side, the business, some of them have tripled revenue within a year.
Snap. For real?
But they were on a growth trajectory already. So I don't know how much is us, how much is them.
Oh, so modest.
But the way that they approach business is very structured, whereas previously it was, I'll just do whatever needs to be done on the day.
Yeah.
Whereas now there's a bit more planning and foresight.
Right.
Okay, what's happening for the next 6 months? What are our priorities? Often with small businesses, you'll have 100 ideas. And we always say, if you have 100 ideas, you have none.
Yeah.
You need to make sure you prioritize the top 10 or top 5 and then go and hit those hard.
Oh, look, we've got the consultants in the room now. All right.
But I think that's the great mix, right? It's
Okay.
the consultant skill set with that entrepreneurial gut feel that works really well.
And whose money are you investing? Like, do you have LPs? What's your structure there?
We've partnered with Kaleo Capital, who are a wealth and asset management company, and they're raising from their high net worth individual base.
Oh, so it's private. It's private wealth.
Private wealth. And we've structured...
Has that been important to giving you the freedom you needed to make these sort of decisions or tweaks or hybrid decisions?
Yes. So the high net worths are often self-made. They have been successful in entrepreneurship themselves, and we need them as advisors for our opcos. So we can call on them and say, "Hey, you launched a successful product back in the 80s or whatever. Can you please help us now with this route to market strategy or whatever, or be a mentor to the CEO of a company?" So that's very important. And then also about keeping capital local. Often you have international DFIs or foreign investors coming in, and then where does the money, or where do the dividends go afterwards? It goes back.
The intensive part of your model is where I think all the focus should be going on the actual startup, extracting business value, massaging it, working with the actual founders, building up businesses that can later scale, like injecting the sensibilities for scaling that might not otherwise exist in most founders who just start a business and they get big. I feel like that's super time consuming, probably very expensive to do. Except I feel like it's also energy that a lot of sort of VC, sort of PE outfits spend sort of managing investor relations or sort of just making sure they're on the same page with LPs and all that kind of thing. So have you seen, am I judging that right? Or
I think you are.
Okay.
And that's why the model's slightly different, because it's very operational. It does take a lot of time. But when we were consultants, we were working 70, 80 hours a week. So for me to dedicate 40 hours with
you're like, oh my word, a holiday.
I still have the same amount of time to dedicate to it. But because we partnered with Kaleo, we don't have to go out and actively capital raise. We don't have to do a lot of these things that traditional VCs need to. Brendan always says, we don't need to go to conferences all the time.
But let's talk about that, because we had a very candid discussion about, and I love how you don't shy from it, and I think it's great. I think we really need to put it out there. Musa, in some respects, represent that. I certainly represent it in many respects. The sort of privilege sitting in this room in many different facets. In the context of what you're trying to do, there's certain things that people just as bright, just as driven, just as focused, or just as sold on, the hybrid you're building would not be able to execute without a lot of what you and Brendan bring to the table in terms of like quote unquote pedigree, network access, etc. How do you guys navigate those issues? Because I mean, they could potentially trip you up in terms of preventing you guys from actually growing the way you should, or identifying potential, correctly. So there's that side of things where it could be bad for your business because you come from this and you are this, and then it's also doesn't it just suck that not just everyone could do this in the way you're doing it?
I think it does suck that not everybody can do this, right? It's that channel access. It's whether it's someone who wants to replicate the Secha model, or it's the entrepreneur that can't get into the retail store because they don't know the buyer, or they don't have those networks.
Or they didn't grow up in Stellenbosch. Excuse me.
But I think how we are mitigating that risk is building this playbook. That's just once it's ready, we want to share it with whoever wants to do this. And I'm as open to share my networks and my connections and everything that I have with whoever wants to make this work.
That's very un-Bain of you.
I think it's very Bain. Bain is.
Don't I pay to access that? Don't I pay like top dollar to access?
No, you do, but I think within Bain everything's very sharing and caring. And
but you have to do it.
Yeah.
Oh no, so I get you. That was a low blow because I know you guys are still friendly with Bain, and I mean, still you leverage your relationships there as you should.
Which is the hard work that we put in, and now we're leveraging those relationships.
No, because I often hear like
entrepreneurs
consultants say I'm a recovering consultant in the industry. And I feel like, but dude, like, why would you do that? Like, that's like that's the best thing you got going. like network wise? Like, why would you even give them the impression you're not proud of that
Something,
association?
yeah.
No, we love the relationship with the band. We still keep in touch with all of them. We had some externs come over and
really?
work with us. It's
See, Musa's rubbing off on me, like the brand thing. You got to manage that PR. You gotta do the, you gotta manage the brand. No, but I mean, it's been really fun, like having you over. Just also your perspective. We like having people who are different to us come in here, like bring us a certain perspective. And frankly, just in you answering some of these questions, I'm hoping our listeners are starting to sense like some of the things that we rant about. Like Musa's, he's heading up a group of like three startups himself. They're all in the tech. Oh, you probably already know this, but I mean, he's got like some serious plays, in ed tech and in ad tech and other things as well. And he's again leveraging the best of everything he's gleaned, like being a corporate animal with an MBA and all of that, into doing things in ways that no one seems prepared or interested in doing them. And I think we expect no less of people like you guys. And I say that carefully because I know I represent a certain level of privilege and I need to figure out how to leverage as well every day. But just in answering you those questions, I think our listeners are starting to say, oh, so that's what they mean. That's why it bugs, Musa and Andile when, VCs seem totally out of touch with them. They just fly in here, drop some money and leave, or send like recent repats or expats, with a heart for Africa and think they're going to make magic on the continent. It's not that we don't want all these people participating in the ecosystem or investing in our country. It's just we can see why it's not going to work and why there's just so many better ways to do it. And kudos to you guys, just from like you're interacting with your team, bringing in your team on social media. We could and just also doing our research about are these guys for real. But also we just sense that, hey, like there are people doing it in ways that are different. And just because you're not in tech doesn't mean this conversation shouldn't be had, and that other investors listening, trying to apply 10x theories and investor, outcomes in the tech world shouldn't be listening to this and going, hey, maybe I can learn from that. And you're not alone, by the way. I've had recent conversations with I'm sorry, I'm going to forget his name, but he's one of the more prolific angel / VCs in Egypt. Blew my mind, my conversation with him, just realizing that, hey, not everybody is just stuck on this Silicon Valley copy and paste situation. Yeah.
I like that interview because he talked about how he meets with his investee companies every week.
Every 2 weeks, Every 2 weeks he's like 2 hours and he screams in there. No, he has very... I need to get to his name because this is going to be embarrassing.
But I think you say that we aren't tech-focused. I think every business now needs some tech, no matter what you're doing. It's Brendan says... saying today that you're tech enabled is like saying you're electricity enabled. Every business needs some of this, and if you can leverage those tools, it'll just make your life that much easier.
Because to be fair, I mean, some of your plays have to figure out e-commerce. Some of your plays have to are sort of tech plays in the sense that when you're formulating a new hair product or cosmetic product, I mean, there's not happening.
Testing.
And there's testing. There's all sorts of scientific approaches to that. Or you know what I mean? It's I suppose I say tech in the context of what's stereotypically considered a tech firm, maybe very strong software focus.
But even those, like with the bolt-on company, for example, we want a new route to market with a sales team. How do I manage a team of 10, 20 people? And there's software called Repsly, for example, that enable us to put in the route that the reps should call on. They can then provide us with feedback, take photos of the shelf. Is it in stock? Is it out of stock? Place the orders on their tablet or whatever the case is. We get that, and then we can fulfill those orders rather than the old school method of putting it on paper and then shipping it down.
I want to highlight what you're saying now. Again, that sort of thinking is quite important because even, I get stuck in that rut sometimes and thinking of tech and innovation as like specific things that only exist in the ether, or, if an enterprise is not inherently like software focused, it's not tech focused or innovation focused. Frankly, that's how Africa's richest man thinks, Aliko Dangote, and it's ironic given like how he owns like cement. And I'm like, how could that not be a tech play? You know what I mean? But you're so right, and I think that's the kind of thinking where it's harnessing of tech and innovation in pursuit of a business outcome or innovation for that sake, and not the other way around, which I think typically is the case where there are VCs that go, oh, there's no AR in this pitch deck, oh, there isn't any, oh man, if only you guys had like a little AI component, like we'd be all in, but
a little AI component.
Like, yeah, it was a little, if you guys had just shown some understanding of where this is all going, and I don't know why I just went into an American accent that way, but you get what I mean.
Yep.
I think there's a lot of that too, where it's like, can we just be all the way African? Like, the reason WhatsApp is a big deal on our continent is not because it's this app that, oh, so cool. It's because it's literally changing our lives.
Just SMSs that went to private school.
That's what it is. That's what it is. And now, so it's innovation chasing key outcomes that are linked in business routine. So to your point, again, thank you. I will never again describe you guys as a non-tech VC. Because there's no reason to do that. All right, well, that's where we'll leave things for now. This episode of the African Tech Roundup has been brought to you by the Africa Tech Summit Kigali, which is happening in Rwanda on February the 14th and the 15th. We'll be there. Can't wait to see you. The event is, of course, being supported by the Rwandan Ministry for ICT, and it promises to deliver unrivaled insight, networking, and business opportunities. No pressure for African and international tech leaders and investors looking to drive business growth on the continent. Now, the 2-day gathering will explore the latest trends. It features 50 expert speakers. It promises to connect you with 250 key stakeholders from across the continent through keynotes, breakout sessions, and networking events. Now, we're, of course, official media partners, and we are rooting for this event all the way. So here's your call to action. Head to africatechsummit.com right now. Check out the growing list of speakers who will be attending, and more importantly, take advantage of the $300 early bird booking rate, which expires this January. Now that's africatechsummit.com for all the info you need and to book yourself a seat. See you there. A big thank you again to co-founder and managing director at Secha Capital, Rushil Vallabh, and a big thank you, as always, to the homie Musa Kalenga for riding with me all year this year. It's been pretty awesome. Can't wait. 2018, it's going to rock, my buddy. Thank you all for listening, for staying with us right here. You're the most important part of this show, our massive African Tech Roundup community. We love you guys. Don't stop those tweets, Instagram posts, Facebook posts, African Roundup on Twitter, facebook.com/African Tech Roundup, or drop us an email over the holidays, hello@africantechroundup.com. Otherwise,
thank you very much for having me. It's been super fun.
Amazing. Great 2017.
All right. 2018. I just realized I didn't let you guys get a word in. All right, man. I'm Andile Masugu. Look forward to you in 2018. Don't forget, we'll be dropping quick tech chats podcasts all through the holiday season. So those will be published weekly throughout the holiday. Go ahead and turn your notification settings on wherever you listen to us. Simply check into africantechroundup.com for all the freshest content drops. I'm Andile Masugu. Thanks for listening. Happy holidays.